Hey folks, welcome to the Mortgage Update with Dan Frio. I, of course, am Dan Frio. Today is April 29th, 2020. My strap's getting a little bit loose. All right, so we like today's number. Look at the number today. Up 6. Let's see what the trend is the last, this is good enough. Last 3 months. Look at this trend. Loving it. Loving it. Let's just go the last 5 days. You're going to see this is pretty cool. I like it. Other than this, get rid of this blip, this is a nice line that we see here. So let me explain why I do this. And today I want to go over conventional financing and how you can qualify for conventional loans to refinance and or buy. You might be surprised at the guidelines. But first I want to go over why you came. It's the Mortgage Update with Dan Frio. I'm switching a lot of things. We're going to rebrand everything. The rateupdate.com. So I just bought those names and the websites. We're going to launch some new websites with that as well. So let me know what you think about the name, therateupdate.com, because a lot of people are concerned about what's going on with rates. But I like the channel to be informative about, how you can take advantage of some of the low rates today. Easy ways to refinance, why you might want to refinance, the guidelines behind things. All kind of basic questions, and I like to just make it common sense. So there is no dumb questions, and I'm trying my best to figure out what questions you guys have. So I do need you, please, to post down below. But I'm posting a video later this evening or first thing tomorrow morning on how to refinance a conventional loan and all the guidelines behind everything. And when it comes to that, but what we watch on a daily basis is this number right here. Why do we watch this number? This is actually the number that is affecting or creating or determines mortgage rates. So this is mortgage-backed securities. That's the MBS behind this thing, mortgage-backed securities. It's a bond that trades on Wall Street, just like any other bond. And this is the price that we follow. As you pay more for a bond investment, anybody who buys bonds or has invested in bonds, the more you pay for that bond, that the yield that you get on your rate of return is lower. So you hate spending more money to buy that bond because you're getting a lower rate of return or lower ROI. So what this is, we on the lending side, we love it because as this goes up, mortgage rates come down. And a lot of people say, I'm going to follow the 10-year Treasury and I'm going to follow this and I'm going to follow that. It normally should have some correlation to what's going on with mortgage-backed securities, but it doesn't have to. This is the vehicle that controls it. All right. So that's why we watch this on a daily basis. This wasn't really a big enough move to make anything change today in regards to rates. That's a good thing because what we hate is this volatility here. Look at this run we had, and then right here it just plummeted, and then it came back. And now things are staying stable, and that's what we want, stability in the market. That's why the Federal Reserve is stepping in, and they're buying up mortgage bonds, these mortgage-backed securities, to stabilize the market. And a lot of companies, just so you guys know, there's a lot of companies that are really struggling right now, and these are some of the big servicing companies out there. Let me explain to you what's going on in the market. The forbearance buzzword that's going on out there is the thing that's killing a lot of mortgage companies or a lot of mortgage servicers right now. So don't be surprised if you start or stop seeing or hearing a lot of advertisers from the big mortgage companies that you always think of that might have, rocket ships or stadiums or things like that. Here's why. Let me make it as simple as I can. When you take out a mortgage, here's you. You get it through a mortgage company, and let's say it's a place that shoots things up to the moon in a vehicle that's powered by rockets. Okay, so you take it out with them. I'm going to make it as simple as I can. In turn, they bundle up all these mortgages and sell it off, or it gets sold off as a bond to some bondholders. It might even be in your investments that you own. All right. That company is all they're really doing right now. They're a collection center for that bond group or all those mortgages. They recoup their money back, by selling off those bonds and everything, but they're just a servicing center. So the reason for their existence is they collect payments from you, the homeowner. They take maybe $100 on that your payment, and then they send the rest off to the bondholders or the entity that ultimately funded that or has the skin in the game of the money that lent you. All right. So there's you, there's that payment collection center, and then there's the investors. All right. The forbearance agreement is messing up this whole system because legally there's an obligation between the servicing person or company and this end investor. All right. So what's happening with the forbearance is a lot of homeowners are saying, I'm going to apply for this forbearance thing. So you won't have to make mortgage payments for 2-3 months. There's a huge catch behind that. So check out some of my other forbearance videos. So what's happening is on that forbearance, if they're not making the payment to that servicing company, that servicing company still has to pay the bondholders. These servicing companies are running out of money. They don't have the money. Homeowners aren't paying. Thus, they have to go into their coffers or go into their profit margins or go figure out how they're going to get money to continue to make payments on these to the person or the entity at the end. So the forbearance agreement is playing devastation to that middle company. And that's why you're probably not seeing, and I'll do it tomorrow, we're going to go back on Bankrate and scan some other systems. A lot of these companies aren't even showing up anymore because they're really hurting. So that's basically the forbearance thing. That's the hardship that lenders are having. You might say, I could care less about the lenders right now. I'm just trying to make it on my own to get through these times. Well, the forbearance agreement, I can almost assure you, isn't going to work out to benefit you in the long run. The banks don't buy stadiums and don't pay their CEOs hundreds of millions of dollars by, giving you breaks in life. What's happening in most cases is they're saying, you can postpone. That's a great word. You can postpone your next 2, 3, 4 mortgage payments. But after that postponement period, you have to send in one big balloon payment of all the payments that you missed plus that current month's. So just say if you skip 3 mortgage payments, postpone 3 mortgage payments, on that 4th month, you have to make those 3 up plus the 4th payment. So you have to make 4 mortgage payments in 1 month. It's going to devastate consumers on that end. And then if you do take the forbearance, it's killing the lenders. So in about 3 to 6 months, you're going to see huge devastation in the markets. Thank goodness, we are flushed with some cash. We have over $1 billion in credit lines, so we are okay. And so we're closing. I just got a loan through today. We've been working on it for 6 calendar days, and we went from start to clear to close. So we're here for you for that. So let's go on to the next thing is home sales, pending sales. They're getting clobbered. Nobody wants to go out right now and look at homes. Well, where this can benefit you, let me see if I can move my picture. Where this can benefit you is, supply demand. I think there's still as much supply out there as normal, but the demand is limited. What happens when you have over demand or oversupply and under demand? Better prices. So you might be able to pick up a house right now that the person has to sell it and they're saying, I got to sell it, I'll take whatever. So you might get, I'm not saying go in and give them, offer 50%, you're never going to get it. But you don't have as much competition in the market right now. So that's the big headline I want to say there. So the silver lining behind all of this, I could be your lender. We can close you within 30 days. We have, and I'll show you again tomorrow as I did last week, we have pretty much the best rates in the market. Not only rates, but fees. So I can, complete all those tasks for you. When you're looking for a mortgage, you're saying the best rate. Well, good communication, reputable service, great rates, and low fees. I mark off all those in that category. So I hope you at least reach out to me, and I'll give you my information at the end of this. I want to go over right now conventional financing. So the past week I went over how to refinance your mortgage if you have an FHA, VA, or USDA loan. I want to thank you guys. I think we had over 20 applications over the weekend, and we got another 6 or 7 today just on YouTube's. So thank you. But let's go over I'm going to just talk about refinances right now. All right. So here's the grid that you see. So let's just look right here, and it says purchase and rate and term, and then there's cash out. Let me explain the definitions behind this. We're just going to look at rate and term and cash out. What a rate and term is, let's say you owe $300,000 on your mortgage. If we get you a new mortgage, we're refinancing $300,000. You cannot pay off a second lien on your home unless you used it to buy your home. Many people bought a house, so they bought it and then they automatically took out a second mortgage right then and there for the purchase transaction. We can do that and lump those two together, but you cannot refinance your home that had a home equity loan taken out after the fact. That's called a cash out. So a rate and term is basically you're just refinancing the primary lien on your home, and you're either getting a better rate or a different term. So that's rate and term. Cash out is exactly what it says. You're refinancing. So let's say you have a $500,000 home, you owe $300,000, and you're like, Dan, I want to pay off some credit card bills and put 10 grand in the bank. You can do that, and that's called a cash out. So let's go over the variations of this. To qualify, I'm just going to go through the basic guidelines. You need a 620 credit score. It's actually lower right now than FHA programs. FHA programs, the norm out there right now is 640. Okay, so 620. You might say, well, didn't Wells Fargo and Chase just come out and say you need a 700 credit score? Yep, you do to go to them. You don't to go to me. So we can actually do a rate and term refinance for you up to 97% of your home's value. Now, to do 97%, your loan has to be either currently financed through Fannie Mae or Freddie Mac. You have no idea if it is. Please call me or let me know. Send me a copy of your mortgage statement. I'll probably call you and get some information from you, and we'll look it up to see if you qualify. If you don't, you can go up to 95%, okay, on that. And on the cash out, you can go to 80. Let me tell you what's happening a lot right now. Over half the files that we're working on right now, we're getting what we call a PIW, which is a property inspection waiver. So what I do is I scan all over the systems and check and see what your house is valued at all throughout the web. I plug that value into your loan application and I run your loan application. All lenders, me, Quicken, Wells Fargo, Guaranteed Rate, whoever, Bank of America, everybody, we basically use one of two systems. We use Fannie Mae or Freddie Mac, or we can use both of them to just kind of prep your loan for an approval. So we plug all your data in. That's why I asked you to do the online application, because it compiles all your data. We pull your credit, and then we run your loan through one of those systems. That system will evaluate your data through the computer, and it'll evaluate your credit report, and then it'll come back to me and say, Dan, loan's approved, and you know what? You got a PIW on this file. What PIW is the property inspection waiver. What that means, we don't need to do an appraisal, period. The computer system was comfortable enough with the value that we're using in the system that we need no appraisal. More than half of the files are coming in, and that's what's happening. Many of them, if I get a PIW and you're at 90%, what I would do is I'll go into the system and say, you know what, another system, maybe Zillow gave you another $20,000, $40,000 on the home value. I'll plug that in, rerun it again, see if we get a PIW. Monday, I had 3 applications that I ran. And I ran it starting at, I think Redfin was the lowest, then Trulia, and then Zillow. I ran it at the Redfin value, got a property inspection waiver, and it was 90% loan to value. I reran it at Trulia's value, and it was a little bit higher, and it was an 84 loan to value, and I got a property inspection waiver. Then I said, well, let's see if the Zillow value will work. I put that value in, which brought us to a 79.8% loan to value. Here's the kicker, and I'll explain to you. This is huge. I got a property inspection waiver. That person now can get a conventional financing loan under 80% loan to value with no PMI. So we took several of those clients that were in the 4.5 range with PMI and got them 3.25 rates with no PMI. And the average savings was about $350 a month. So that's where all of this can come into play. And that's why thousands of people throughout the country use me because I try every way possible to get you into the best program, the best rates with the lowest fees out there. So I hope you like the video. If you do, please don't forget to give me a thumbs up. Help me share the video out there. You might have family, friends, neighbors, somebody out there that we can help. I'd appreciate it if you'd do that. And then if you'd like to reach out to me for my services, give me a call, 844-775-LOAN. That's 844-775-5626. Or you can reach me at thefrioteam.com, and I will plug up my website right now. And this is changing here shortly, and it's going to be phenomenal. What you end up seeing is thefrioteam.com. There's my phone number. Or if you'd like to email me, send me an email at D for Dan, Frio, F-R-I-O, at preferredrate.com. So God bless. If I could be of any help, please reach out to us. We'd love to help you, and we're here for that. So take care. Have a great night, and I'll see you tomorrow. Bye-bye.